So, Eileen, first, I want to get to this idea of, obviously, when people think of tech companies, I think sometimes it gets lost just how many industries tech is interwoven in when we think of this, calling it a bailout. So what is your take on that? And it's really the narrative that's been surrounding this.
No, I really appreciate you, first of all, having me on, but also asking that question and letting me frame it, because I do think one early reaction to everything that happened on Friday was that tech was quite insulated as a sector, that it was probably just, affecting entrepreneurs or people who were tinkering in a garage or who were actually just working on really novel inventions or something that was really fanciful. And clearly what all of us knew or were concerned about was the knock-on effects and the fact that tech is now really not even its own sector. It permeates everything that happens in day-to-day life, in all of commerce, in all of business, across every industry sector, from payments to transport, to notifications, to healthcare, to literally everything that we rely on, all the way down to food supply, really. So this would have really had massive, massive knock-on effects.
So then in terms of how you're viewing risk management at some of these banks, especially the ones that do have a very high proportion of one particular sector, or especially when you have a very large chunk of these depositors who have 250,000 or more, what are some of the conversations that you're having in assessing risk right now?
Yeah, I think nobody knows, because if everyone knew, then everyone would be making deposits over there, or everyone would be doing exactly the same thing. I think the real lesson learned is the key is going to be diversification and making sure that there isn't too much concentration on one side or the other. On the one hand, for a company doing its treasury management, not to have too much concentration in all of its funds in one institution. For banks as well, for those institutions, not to have too much concentration or reliance on any particular sector.
And what do you think about some of the criticism about perhaps VCs that maybe got a little greedy, maybe didn't look at all the risks, and some of the pushback that people are saying, why should they be getting bailed out for this? But what would you say about that?
Yeah, I think it's an easy narrative, but actually, as you were just talking about with Alexis there, it's not a bailout, right? And I know President Biden's made a lot of effort to clarify that that's not the case. It's not the bank's shareholders that are being bought out, that it's not them that are going to be getting their equity value back. This is all about protecting depositors. So that's the first point. The second point is, this kind of goes back to what we were talking about earlier. Technology was not more inherently risky as depositors or the types of clients and the companies that were holding their funds at these banks. They weren't riskier than any other kinds of depositors. And so really, there wasn't anything inherently, I think, greedy or inappropriate on behalf of investors or anyone else who was actually banking with Silicon Valley Bank.
And I want to talk about some of the contagion that we saw, because we saw the reaction in US markets and for the US banks and the regional banks as well, even despite President Biden's assurances. But then when you look at the reaction that we saw in Asia and Europe as well, talk about that reaction and what you think that actually does for the VC landscape, the discussions being had.
Yeah, again, I think it's interesting because VCs and venture or investors, they're probably going to be the ones to move on most quickly. They're clearly worried about their assets. They're worried about their investments. They're wanting to make sure that their capital is not going to be at any kind of risk of contagion with respect to the banking sector. But once they have then access to the funds and they know that their assets or their portfolio companies are protected, they're still looking for value. They're still looking for innovation, and they're still looking to get a return on their investment. In terms of the global effect, or what you were alluding to, and the kind of aftershocks that are affecting Asia, that are affecting Europe, that's still very real. And I think we're going to see a little bit more jitteriness until the US situation is clear and at least to stay what it feels like things are like now in the UK.
And are there certain sectors that look more attractive to you at the moment when we see US financials coming back slightly, still not where they were when you compare them to what we've seen over the last 2 days? Though, do you see any opportunities in this space right now?
There's always great opportunity, right? And you're seeing probably inflows at a number of institutions that are probably benefiting from what's happened in the last few days. Clearly, there's always opportunity in chaos. I think most, though, are probably just going to lay low, keep their heads down, make sure everything's back on track, make sure money's where it ought to be, all the accounts are accessible, and the funds are where they should be accounted for, and just wait it out for at least another week or two.
And we're still seeing discussions about what this means for oversight. What sort of oversight would help you sleep better at night as a VC investor?
Yeah, for the banking sector, I think that is a really, really important conversation. And I know far less about sort of banking regulations than I would do about sort of technology or what investors are thinking, or even startup and scale up founders might be thinking today. But oversight of the banking sector, I think it goes without saying, it's even more critical now than ever before. We've seen how the definition or, the case study or example of a bank run differs from what it did in 2008. And for all of history, everything's now online, everything's digital. You can see customers trying to withdraw 42 billion in 24 hours. We have to start adapting to what measures need to be in place, given how quickly things can spiral out of control.
And you raise an interesting point, because when people think of traditional bank runs, tellers could just shut the window. Now, just like that, with digital banking, it's really been a game changer. So what does this mean for startups then, and the sort of how they're approaching funding and their banking as well, do you think? What are some of the startups that you work with saying?
Yeah, I think all of them are breathing a huge sigh of relief, at least here in the UK. The ones that still have funds with Silicon Valley Bank in the US, they're probably waiting to see when they can get access to their funds. But then they're just all thinking about, again, diversifying across multiple accounts, whether that's leaving it now at HSBC, the new parent company for the SVB UK entity, or other banks. They're going to diversify. They're going to make sure not all of their capital's in one place. And then they're going to just breathe probably another sigh of relief and then carry on building and onwards and upwards.